We do know that Bitcoin is by far the leading cryptocurrency, and you think will remain that for a while?
I do. I think the most important thing that happened this year in Bitcoin is Larry Fink. He got orange pilled, as we say. Orange pill is when you take a non-believer and you make him a believer in Bitcoin. And Larry was a non-believer, and now he says, hey, this is going to be a global currency. People around the world all trust it.
Well,
BlackRock is the biggest asset
BlackRock is
manager.
now doing an ETF, or trying to do an ETF for Bitcoin.
Yes.
Is that a big change in the industry?
Yes. For Larry in particular, right, who was the CEO of this iconic company, to say, I believe in this, right? That's kind of huge, because again, like when Elizabeth Warren says, well, I don't believe in Bitcoin, I'm like, well, Elizabeth, Larry Fink does, Stan Druckenmiller does, Jeff Yost does, the richest person in your state, Abby Johnson does. Like, just because you do doesn't mean it's not real, right? Value comes from when people believe there's value. And now we have this preponderance of evidence, 180 million people around the world that, without a gun to their head, take their hard-earned savings and store it in this community of people that run this technology, called Bitcoin.
On September 12th, Jamie Dimon says Bitcoin is a fraud. He says he'll fire any one of his traders buying Bitcoin. Bitcoin drops 24%. When Jamie Dimon speaks, people listen. So that weekend, we found out that the largest buyer of a Bitcoin fund that's in Europe that buys physical Bitcoin, right? The largest buyer was Morgan Stanley and JP Morgan.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, we have Mike Novogratz, and we know he's a Goldman Sachs guy, so he's not going to tell us the whole truth. But he talks about Larry Fink and BlackRock coming in on Bitcoin. And we know BlackRock and Vanguard own everything. And the big banks and big corporations have been funding crypto from the beginning. And they use the mainstream media to push the Hegelian dialectic, making the masses indecisive, so therefore they don't invest. And when they do invest, we have the mainstream media pushing it while it's at its highs, and then the masses get left holding the bag. That's why I tell you to understand the technology, so therefore you don't fall for the devil's tricks. And guys, we get the news that Yellow Trucking is closing. You're talking about a 99-year-old company. And we know the agenda, out with the old, in with the new. And we'll be seeing a whole lot more consolidation. And we have 30,000 people that are going to be laid off, guys, out of work. And you don't see a government official talking about it. Now, this is when the government should step in, because it clearly was a pension issue. We know these corporations have been taking advantage of the 0% interest or low interest rates to borrow money to make these pension payments. Now that interest rates are rising, guys, we know these pensions are bankrupt. And we know in December of last year, Biden issued $36 billion to aid pensions. So guys, the crisis haven't even started. But we know the goal, the fourth industrial revolution. They want the robots, algorithms, and drones to take the economy over, and the sheep to go inside the metaverse. And speaking of the machine takeover, we have Dr. Scott on CNBC acting like he knows something about AI. And guys, we know he's reading nothing but a rehearsed script. And we have Andrew honestly saying that people rather speak to a robot than speak to a human being. But guys, we know he's nothing but a World Economic Forum Davos puppet. And we know Rebecca and Andrew were playing the Hegelian dialectic. One for it, one against it, in order to move towards the agenda. But guys, we know IBM Watson has been in the hospitals. I even put that in my NWO book a long time ago. And then guys, we know from Ben Goertzel, which I've done several videos on it, saying that Microsoft and Facebook Meta have been investing in the medical field. And Ben Goertzel has the robot Grace, the medical assistant. So we already have physical robots already inside of your hospital. And guys, I know this sounds like a movie, but remember, your life is an illusion and TV is your reality. Because we know when it comes to the New World Order. It's all planned out. You have a wonderful day.
Notifying workers over the weekend that is halting operations and closing all of its locations. Frank Holland joins us with more on this. Frank, what's going on?
Well, Andrew, good morning. That bankruptcy means about $5 billion in annual freight volume is potentially up for grabs. That's about 3 million shipments from Yellow customers like a Walmart or a Home Depot. And overall, this disruption is boosting other companies in the less than truckload space. That's where several companies put pallets in the same truck as opposed to one customer filling up a truck. We're talking names like Ryder, rising double digits, XPO up 9%. There's a common saying in transports, mystery equals margin. These carriers are expected to get much of Yellow's volume at a premium. At the same time, in just 4 months, we've swung from fears of a freight recession to Dow Transport's trading very close to a 52-week high. Consensus is that trucking rates have also bottomed and are now heading towards an upswing. And while they are negative year over year, when you take a look at these are tough comps. This time last year, rates were pretty close to all-time highs as the supply chain continued to normalize post-COVID. Most analysts have forecasted a second-half rally for transports. A number of tailwinds in the second half include the summer produce season, the fall harvest season, and, of course, the holiday shopping season. Analysts say the destocking trends, that's retailers holding less inventory, they really appear to be reversing. So back to Yellow. The shutdown of the trucking company could also have about 30,000 workers potentially looking for work at new companies. Many of these workers, they're truck drivers, really creating an influx of labor that analysts expect to help the margins and earnings of a lot of companies. Remember, trucking pay spiked during the pandemic as companies competed for drivers to handle a lot of elevated demand. So last week, Citi put out a list of the top picks expected to benefit from this disruption. Among that list is FedEx. That's the largest less-than-truckload carrier in the nation. Also, Knight-Swift, that's the largest trucking company in the full truckload space, as capacity is expected to tighten dramatically after the shutdown of Yellow.
That took the bailouts, got the bailouts, and has now fallen into bankruptcy. How much money had they taken? Do we know what happened there? And what kind of fallout do you imagine?
Well, they took about $700 million in government assistance. The rest of it's really hard to figure out because it was just two things happening at the same time. Yellow itself, they had an initiative they called One Yellow, just a transformation of the company overall. They had combined some business units. They had done some different things. So this was a company that was trying to transform itself at the same time, faced a disruption. And then just in recent weeks, they missed or they asked to defer some payments to the pension fund for the Teamsters. So that created some other risk there where the Teamsters threatened a strike. So it's just a lot of different forces that were impacting this company at the same time. I don't know if this company is necessarily a read-through to other companies in the transport space, because, again, if we can show the one-year chart of Yellow, they've consistently had some issues in the eyes of investors with their transformation plan.
So how much was this a leveraged situation, though?
You know, the company did have a lot of debt, again, as part of that transformation plan. Some of the other issues, according to analysts at least, were just operations. They weren't necessarily operating in the most efficient way. As you see disruptions in the trucking space, it's a cyclical business. Sometimes pay spikes, sometimes the volumes decline. I don't think a lot of companies really forecasted this really dramatic shift from goods to services. When you see a lot of companies in the transport space had really been preparing themselves for increased volume from e-commerce, increased volume from just the economy going strong. And then at the same time, we saw dramatic rate increases from the Fed as well, which created higher cost of capital. So a lot of different forces weighing on this company.
Hey, Frank, the idea of the Teamsters union, I mean, I know that hastened things in the last several weeks as all of the retailers and other big companies that needed shipping kind of moved their shipments elsewhere. That was kind of the end of things, as you saw the Teamsters union there. But is Yellow a very different situation than what we saw with other strike potentials? Is this because of the debt load and the failure to pay those pension payments, or is this what happens when there's a strike? I mean, I'm trying to figure out how unique of a situation Yellow is.
Well, definitely a different situation when it came to the reason to strike. When we saw the Teamsters and UPS, they were threatened to strike over a new contract. There was not a new contract up for negotiation at Yellow. The issue here were pension payments. Yellow had gotten into financial distress through a number of different reasons, and they asked to defer pension payments, which created a situation with the Teamsters concerned about the pension benefits of their members, which is still clearly a concern here with the bankruptcy of Yellow.
Okay. Frank Holland, appreciate your perspective and helping us through all of it.
Yeah, a complicated situation, but one, at least for the stocks that are impacted in this space, should give them at least a temporary boost. The question is, what happens to these loads long term? We have customers like a Walmart and a Home Depot obviously want to solidify their capacity, especially for the holiday shopping season coming up.
You're convinced, though, the employees, there's not going to be an issue, that most of them are going to be employed?
Well, I mean, an issue, of course, if your company goes bankrupt and there's questions about your pension. So huge issues for them on a human level, of course, Andrew. I don't want to minimize that at all. But right now, we're just talking about the stocks and the supply chain. Are there other jobs out there? Certainly. There's certainly other carriers looking for truck drivers, looking for other supply chain workers. So I don't want to minimize the impact on these workers. I was looking at some of the details of the severance packages. For some workers, it'll only be 2 weeks of severance. For others, it's obviously weighted depending on how long you've been with the company. So I just want to make sure I'm not minimizing the impact on the people.
The young global shapers, that's really been the transformation. I mean, I'm a young global leader. Right. So are you? Yep.
Welcome back to Squawk Box. The artificial intelligence boom is growing now in the healthcare industry. Companies like Amazon, Google, and Microsoft are all looking to merge healthcare with AI, starting with the summarization of doctor visits along with imaging files and other things. I would say managing files, but also imaging files. Here to break down what this all means for healthcare, CNBC contributor and former FDA commissioner Dr. Scott Gottlieb. He also serves on the boards of Pfizer and Illumina. Good morning.
Good morning.
Okay, so in the AI universe, what do you think the biggest opportunity is, but also, let's go, biggest challenge?
Well, look, right now you see a lot of organized machine learning, looking at data sets for things like radiology, what you mentioned, pathology, evaluating slides, also in cardiology, looking at EKGs. That's been under development for a while, and there's a number of approved modalities for doing that. So Google, for example, has something that can look in the back of the eye, images of the eye, and diagnose diabetic retinopathy. There's 2 approved platforms for doing that by a company called IART and another one called IDX. So organized machine learning, looking at controlled historical data sets based on algorithms to make diagnoses, has been around for a while. The real sort of big opportunity is to use large language models that can do natural language processing to actually do patient interactions. The technology is there to do that right now.
Oh my gosh, when I call the bank and you have to go through the crazy codes to get
There's regulatory impediments.
Right. The question
gotta be kidding me.
But what I was going to ask you, though, about this is, we're still not at a point where a lot of the large language models can do things that I would describe as mission critical. They're not good with math. They still hallucinate. How far away do you think we are from real interaction? There are, by the way, Inflection and a couple of others are working on programs right now that are, you instead of having a psychiatrist, you would actually just interact with. And by the way, there are studies, Becky's laughing, there are studies that show that the computer is more empathetic than a human. That actually people enjoy the experience more of actually interacting with an AI, if you will, than with another human being.
The young global shapers, that's really been the transformation. I mean, I'm a young glal leader. Right. So are you? Yep.
It's got to be different than these things I talk to.
They're doing talk that way. One of the challenges is there's not a lot of large clinical data sets to train these models on, and the models that exist have been trained on sort of a small number of parameters relative to like ChatGPT, some of the large language models that we're interfacing with. They're already being rolled out into telemedicine portals. So if you look at like Cure AI or K-Health, and you go on there, the first 5 or 6 or 7 questions you get asked will be through an AI interface in many cases, and then it will default to a doctor and it will provide structured information to the physician. So the initial intake will have been done by an AI chatbot. Making that transition to having it fully automated and allowing the AI to handle the interaction soup to nuts, that's a real regulatory challenge. And I think what we're going to do is look at some simple interactions. Those might be the first to get approved, like medicine refills and some simple chief complaints like, pain on urination or...
Okay, so the dream of all of this, though, is to get more accurate readings in all of these issues and to do it more cheaply. And so my question, I imagine they will do the readings potentially better than a human eventually.
Yeah, that doesn't.
Question is, what's going to happen to the cost? Is it really going to? Is this the thing that's going to? I mean, we're all waiting for some magical thing to come down from the heavens and change the cost of healthcare.
Yeah, look, the reason why costs in healthcare don't respond to productivity inputs is at the end of the day, you need a physician or a provider to have an interaction with the patient. So this is sort of Baumol's, the economist's theory of the disease. In industries that are labor intensive, you can't bring down costs with technology inputs. Here, the technology can substitute for the labor input. And as you move towards capitation, more practices are going to adopt these tools because they're not being paid on their physical labor. Right now, we pay on physical labor in medicine through Medicare. When you're capitated, you want to withdraw the physical labor if you can and substitute the technology for the interaction.
I'll say two things. First of all, I always want a doctor to be the interface. I'm thrilled at the idea of the doctor being smarter because it's got AI helping him or her in the background, reading the charts, reading the scans, the x-rays, any of those things. I think that's great. Will there be a time, though, where this kind of adds to the differentiation between good healthcare and bad healthcare, those who get great healthcare, those who don't? Because it seems to me like this is going to be rolled out first in the really high-end areas, in more densely packed urban areas. It's not going to make its way out to the other places. And if I've got a doctor who's smarter because you're getting helped by AI, that means that the haves and have-nots maybe get further.
Yeah, I'm not sure that the bifurcation is going to be on sort of premium practices versus people who are getting care in more austere environments. So, though you will maybe see some adoption based on those parameters, I think it's going to be people who look for convenience, who want a quicker interaction. So, do you feel comfortable that you log on to a telemedicine portal and you're interacting with an AI chatbot for the first, 5 minutes of the interaction, and it defaults to the physician, and the physician now has structured information from your interaction with the chatbot?
We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in an ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Cryptoteacher and the New World Order book, plus the 3 Kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Xrp, the biotech stocks. And while everybody's at home wishing They were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York. From COVID Stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.